Good morning. It's 4 a.m. on Wednesday, April 15th, and the Indian markets are reopening to a geopolitical paradox that will define the rest of the month. Before we look forward, we must acknowledge the sheer resilience shown during our last session on Monday. The week started in a state of absolute panic as the Nifty opened with 461-point gap down. However, what followed was a masterclass in intraday buying. The smart money stepped in at the 20-day EMA, pushing the index back up to close at 23,842. This bullish counterattack tells us that domestic investors are refusing to let global headlines dictate the long-term India story, which is a really good news for all of us. Let's discuss some global news briefly. The big story overnight comes from Wall Street, where the S&P 500 has surged 1.18% to close at 6,967. The benchmark index has now officially erased all losses tied to the Middle East conflict. This green run is being fueled by the cooler than expected US wholesale inflation data and a desperate hope that diplomacy will eventually prevail. However, a new shadow is falling over the market, which is emerging US-China tensions. While the US Navy successfully allowed a Chinese-linked tanker, the rich Starry, to exit the Strait of Hormuz yesterday, the incident has sparked a diplomatic firestorm. Beijing has called the US naval presence an illegal blockade, while Washington warns that any attempt by China to provide maritime escorts for Iranian oil will be met with sanctions. This trade tech tension is now the new variable that could cap the global rally. However, despite the breakdown in the Islamabad talks, energy markets are validating the Monday recovery. Brent Crude has plummeted to $94.95, a massive 5% slide since we last traded. The belligerent trade rhetoric has been ignored by the tape because physical oil is still flowing through the new restricted routes. For India, $95 oil is the ultimate stabilizer, effectively cooling the inflation narrative and giving RBI more room to breathe. Now let's discuss briefly what is the India playbook for today. Technically, we are in a fascinating spot. The immediate support for Nifty is 23,630 to 23,600. As long as we hold this floor, bulls remain in total control. On the upside, 24,000 remains the primary psychological resistance, followed by hard cap at 24,150. For Bank Nifty, look for a mean reversion play towards 55,800 as the risk of a systemic regional collapse fades. Let's look for today's stock actions. Today's stock action is led by TCS Factor, followed by stellar Q4 earnings beat and 12% profit jump. TCS is the market's new anchor. By proving that tech spending is war-proof, TCS at 4,100 rupees is likely to trigger a sector-wide re-rating in Infosys and HCL Tech. Second, keep your eyes on Adani Ports and L&T. While US-China friction is a headline risk, the reopening of shipping routes is a fundamental boost for these giants. Finally, the oil beneficiaries, Asian Paints and Interglobe Aviations are set for a massive relief rally today, as the 5% drop in Brent repairs their damaged market. As the 5% drop in Brent repairs their damaged margins. Let's talk about the market dynamics and closing. The India VIX is likely to cool today as the S&P green run provides a global safety net. While FIIs were sellers on Monday, the record-breaking close in the US and the TCS earnings beat should bring them back to the table today. Today's session is about the reversal play. We entered the holiday in fear. We exited with a record high S&P 500, cheaper oil and a powerhouse earnings report from our largest IT firm. So my strategy for today is simple. Follow the earnings and play the oil beneficiaries. And I will see you at the opening bell at 9:15 live. So thank you for tuning in so early in the morning and I wish you have a great day. Bye-bye.